Good afternoon, good morning, ladies and gentlemen. My name's Simon Catt at Arlington and Cat Calls. I'm at London in the Arlington office. I want to welcome our esteemed guests. Dominic Frisby is at his home office in London, and Michael Oliver joins us from Fort Collins. We are expecting, and hence the delay, Peter Schiff to join us. Peter's somewhere in Puerto Rico. We're going to get going. The format for today's webinar will be, we're going to ask each of the experts what their view is on gold and Bitcoin relative to each other and in general. And then we're going to have debate amongst ourselves, and then we're going to get into questions from the audience. So around about the half-hour mark, we welcome questions from the audience, and we'll have a live Q&A that you can put into the Zoom webinar. Dominic, maybe I can start with you. Seeing as you've written a book about Bitcoin, the future of money, and you've got a book coming out on gold, you're uniquely qualified to speak about both. Can you frame the debate for us, Bitcoin versus gold? Do we have to choose between them? What do you think?
Well, I find it a great shame that so many gold bugs dislike Bitcoin and so many Bitcoin bugs dislike gold, because I kind of think we're both on the same team. And, you know, they're both forms of independent money. They're both forms of money that governments can't tamper with and can't interfere with. And they're both forms of money that are voluntarily chosen rather than imposed. They're not forms of fiat money. And so we're both on the same small government libertarian team, really. And I first found out about Bitcoin would have been 2011, 2012, something like that. And I would have been in my early 40s. And I would go to Bitcoin conferences. Well, I would go to gold conferences in those days, mining conferences. And as a guy in his early 40s, I was the youngest person there. And then I would go to Bitcoin conferences, and I would be the oldest person there. And I kind of think where I was born, 1969, I'm kind of on the cusp between the two, if you like. And I just think a lot of the time, this battle between the two is a generational battle. It's also a battle between the analog economy and the physical economy and the digital economy. And if you think of the fact that you can't destroy gold, the only way you can destroy gold is nuclear explosions. And gold was actually formed when stars collided in outer space trillions of years ago, and it was formed in the explosions which followed, and it was dispersed into space as dust, and then gradually over time that dust compressed and the planets were formed, and that's how gold made its way into the Earth's crust. But if you can't destroy gold, and that gold was formed when the solar system was born, that means that little bit of gold on your finger, or that little bit of gold around your neck, is not only older than the Earth itself, it is older than the solar system. And so when you're touching that little bit of gold, it is probably the closest you will ever come in your life to touching eternity. And I find that an immensely profound thought. And that therefore makes gold the most analog asset there is in the world. But in the global economy over the last 30 years or so, you know, the physical economy has grown by 3-4%, whatever it is. But the digital economy is the economy that's really grown. It's kind of almost saved the United States by itself, the growth of the internet and Silicon Valley and so on. And it's just grown at exponential rates. And that's because there's a scalability to the digital economy that doesn't exist in the physical economy. If I invent a brilliant app, I can upload it to the App Store, and, you know, somebody can buy that, you know, it can be downloaded 1 billion times. Whereas if I want to make 1 billion widgets or something, it's a much bigger undertaking. And so there's a scalability to the digital economy that doesn't exist in the physical economy. And Bitcoin is a digital asset, and gold is an analog asset, and they both have their place. And one of the failures of people who would denigrate the one who would denigrate the other is that they fail to realize there is a role for both. And I think that completes what I have to say. Just to repeat myself, it is a great shame that these two forces can't get along. I think it's a generational problem as much as anything, but we are both allies, and we should be allies and love each other, not hate each other.
Dominic, nicely summarized. Peter Schiff, welcome. Peter, are you joining us from Puerto Rico?
I am.
Thank you for joining us. Peter, if you don't mind, I'm going to invite you to give us your views on Bitcoin versus gold next. If you could give us your 3 or 4 minute views, and we're going to go to Michael, and then we're going to have a discussion amongst ourselves before we go to the audience.
Yeah, I'll just comment on what Dominic said. Well, first of all, I think to the extent that there's a generational divide, it's generally because the younger generation needs to grow up a bit and get a little bit more wisdom and experience to understand the difference between Bitcoin and gold. I don't think that Bitcoin is digital money or money in the digital economy. I think that you can easily digitize gold if you want to have money that you can transfer electronically. We could tokenize gold. Any company could do it the same way that banks or goldsmiths issued paper notes backed by gold. So people didn't have to lug their gold around. They could leave their gold with a blacksmith or then eventually a bank, and the bank would issue a note that represented ownership of that gold. The bearer of the note could go get the gold whenever they wanted, but they could also circulate the bill as a medium of exchange. And that's the beginning of currency. I mean, currency derives its value from the money that backs it up. And in the same way that we printed paper, we could create a digital token that would represent ownership of gold. So if you want to bring gold into the digital economy, that's the way to do it. And people can transact in gold online faster and far less cost than they could with Bitcoin, assuming anybody tried to transact in Bitcoin, but very few people do because it's very expensive and very slow and it's very volatile. Whereas, gold, you can really price products. The volatility in gold on a daily basis is very low. And of course, for centuries, gold was used as money. Gold was the medium of exchange and the unit of account. Prices were denominated in gold. No prices are denominated in Bitcoin. Bitcoin isn't a unit of account for anything. It's not used as a medium of exchange. It's used to speculate. People buy Bitcoin because they think the price is going to go up, and they sell it to other people who think the price is going to go up. But it's not used as money. It's used as a speculative trading token, a collectible item that people build Bitcoin collections. They think they're going to get rich, and then they sell to other collectors. But at the end of the day, I don't think Bitcoin is unique enough to really give it value. I mean, they claim that it's scarce and that there's 21 million Bitcoin. Well, so what? I mean, you can't do anything with a Bitcoin. So what difference does it make? There's 2.1 quadrillion Satoshis. There's plenty of Satoshis to go around. And you can't do anything more with a Bitcoin than you can with a Satoshi because you can't do anything. All you can do is trade it. But there's an infinite supply of other digital tokens. Look at the Trump coin that just came out, or the Melania coin. They have a capped supply. There's a finite number of Trump coins out there. So what? Right? There's no limit to how many Bitcoin, copycats there can be. There's tens of thousands. I mean, they're creating, I think, 1 million meme coins a day or something like that. Now I read. I think Bitcoin is the same thing as a meme coin. What's the meme? The meme is that it's digital gold, but it's not digital gold any more than an image of a hamburger is digital food. Yes, I live in a digital economy, but I have to eat real food. If I had a diet of digital food, I'd starve to death. Gold is a real commodity. That's why it became money. Yes, it has great properties that make it better money than other commodities like cattle or salt or seashells or whatever else humans have used over the millennia as money. But what gives gold value is its metallic properties that make it so unique and so desirable and so useful. It is the most useful metal. It's not just a beautiful metal that we could, use in jewelry. I've got a, gold jewelry on. I mean, yeah, it makes great jewelry, but it's also the best conductor of electricity. I mean, gold is used in all sorts of industries: electronics, aerospace, medicine, dentistry. And the reason that gold is a store of value is because when I own gold today, in 1,000 years, if somebody wants to use that gold for any purpose, and I'm sure there'll be a lot more uses for gold that are discovered in the future than we know about today, but all those properties will be there in 1,000 years. Gold doesn't decay, it doesn't tarnish. As Frisbee's, Dominic said, it's been there since the Big Bang, so it's not going anywhere.
Okay.
If a ship sank in the Caribbean here 500 years ago, if you could find the wreckage, the only thing that's probably still there is the gold, and it will look exactly the way it looked the day it sank, and it will have all the properties, and it can be melted down and used for anything. So
Okay.
that the most important thing about money is that it have value as a commodity first. Money
Okay.
is the most marketable commodity, but Bitcoin isn't a commodity at all. Again, people buy it. People have made a lot of money who bought Bitcoin, but people are going to lose a lot of money who don't sell Bitcoin. It's a zero-sum game. Some people make money at the expense of others who lose it. But of course, there's a lot of money being wasted on the whole ecosystem, on the industry, a lot of capital that is being misdirected to crypto because it's a bubble is coming out of industries that we really need. I mean, we just posted today
Peter,
the
can I stop
largest
you there?
monthly trade deficit ever,
Thank
because
you,
we're
Peter.
wasting our money on crypto.
Peter, thank you. If it's all right, those are very interesting perspectives. We're going to come back and have a debate shortly. Michael Oliver, you've got the big picture. Could you tell us about your views on Bitcoin and gold in the context of risk assets, and where you think the price is going, perhaps based on previous price action in history?
My context is momentum structural analysis is strictly technical. Okay, macro technical using a unique technical methodology, not simple idiot price charts. Okay,
Yeah,
something we developed 3 or 4 decades ago. But philosophically, I agree with Dominic in the sense that I think we're reaching a point in global history, philosophical history. I'm a radical libertarian. I wrote the first book on anarcho-capitalism 52 years ago. But that Bitcoin is in effect a rebellious statement because it's saying, not government, and it's not ultimately expandable at the wish, of those up high. So we need more money. There it is. Okay, with Bitcoin, it's incremental growth. So that's a virtue. I'm still a bit foggy about what is it. Okay, if you ask the question to most people who trade Bitcoin, say, well, what is it exactly you're buying? And I think you get a lot of stumbled answers. Okay, you don't get that with gold. So I'm with Peter on that. I think that it is money, and it's hard to believe it'll ever not be money. Okay, I wasn't quite aware of the history that Peter provided, but that's where I think we are. But I think Peter also had a term that is applicable today, and this is a technical assessment: bubble. Okay. First off, most of the people buying Bitcoin, buying and selling, trading Bitcoin probably can't define it either. What is Bitcoin? Get 5 seconds. 1, 2, 3, 4. Okay, it would be a foggy answer. Okay, so they're trading millions and billions of dollars on something they can't even define hardly, much less when a new one pops up and a new one pops up, and et cetera. But it is clearly a bubble. And I say that in this regard. The NASDAQ 100 is the bubble stock index of the world and of the US. It's gone up 18-fold since 2009 lows. Okay. A much longer bull market, much more multiples of a gain than any other bull market. And you can look at an M2 chart and you can look at a Fed funds chart and say, aha, now I see why. Okay. But over the last couple of years in particular, you can overlay Bitcoin on top of NASDAQ 100. And that doesn't make any sense, given that one is, quote, an independent money and the other is tech stocks, okay? What's the correlation? And yet they breathe in and out almost every day similarly. If NASDAQ has a drastic drop, Bitcoin has a nasty drop. And as far as we're concerned, from a technical perspective now, I'm talking about quarterly momentum, not price. What we're seeing in Bitcoin now is probably topping action. In fact, it wouldn't surprise me that the high we made a couple of weeks ago above, 110,000, 111 or whatever, was it. Okay, we since dropped under 90. Now we're laboring in the low 100s. I can state this based on our technical work. You get down later in this quarter, such as like, 4, 5, 6 weeks from now, late March, you don't want to see it in the mid 80,000s ever again. If you do, it's really going to break. And I strongly suspect that when NASDAQ breaks our key numbers, which is right below the lows we're seeing right now, the recent drop in NASDAQ, which is similar to the lows it made early in late December, early January. You get down there and close a week, and the NASDAQ's headed down, and I'll bet you that Bitcoin follows it.
So
I think gold is the alternative.
What defines a bubble in your view, Michael? Is gold in a bubble as well? NASDAQ's apparently in a bubble, and Bitcoin. What about gold?
Well, it's the multiple gains for one thing. You can define a bubble, but the other is when it's feverish in the way it trades.
Okay.
And also, people in it can't even define it. I mean, like I said, I bet 9 out of 10 people who are in Bitcoin, if you gave them 5 seconds to define it, they couldn't. But it's the multiple gains in the way it's behaving along with the NASDAQ, which is clearly a bubble. Okay. And I would say this overlap has been underway for at least 2 years, where Bitcoin has reflected not the movements in the other non-governmental money, gold. It doesn't reflect that. So it's not like they're a team going up together. They're quite opposite. Okay? There were times when Bitcoin would tend to move with gold, but not anymore. Last few years during the bubble phase, Bitcoin has behaved just like NASDAQ 100. I would say they're brother or sister.
Okay. Dominic Frisby, is Bitcoin or gold in a bubble or anything else?
The first thing is this idea that people can't define Bitcoin, what it is. I'll define it in 4 words for you. Cash for the internet. It's perfectly simple. It's perfectly easy to understand. What is a bubble? I'll tell you what a bubble is. A bubble is a bull market in which you don't have a position. And it is a way of psychologically coping with the fact that you missed out on something, is to dismiss it as a bubble. It's a coping mechanism. Now,
so does that mean there's never been a bubble then? Because there's always people who are long the asset that's in a bubble.
Peter,
so
let me
never
speak.
Been a bubble?
There have been plenty of bubbles, Peter. And we'll go back to the most famous bubble of the lot, the tulip bubble. Everyone laughs at the tulip bubble, 1637. Here we are, 400 years later, after that so-called bubble. That bubble, tulips, flowers, brought 400 years of prosperity to Holland. Today, Amsterdam is the global center of the flower industry. We need bubbles. Bubbles accelerate investment. And in most cases, bubbles, there's a narrative truth to the story. .com was a bubble in 2000, but the internet did change the world. We need bubbles. But in the case of Bitcoin in its 10 years, 12 years of existence has been through maybe 4 or 5 bubble cycles. And it is just a bubbly metal because 1, it is a new technology. And 2, the new technology that it is money. And money, and so you've got a new tech that is a new form of money. It's like the most bubbly asset that you can have. And everyone goes, oh, Bitcoin's topped. It's made a top. Well, there's one thing you cannot argue with Bitcoin, and that is the price. Now, Peter, I've been following your work for a long time. I first discovered you in 2006, 2007. I read your book, How an Economy Grows. I thought it was a brilliant book. I thought it was fantastic. I stand with you on your view of economics, the Austrian School of Economics. I stand with you. I stand with your father. But you have, like, the definition of insanity is to go on saying the same thing and expecting different results. You've been calling Bitcoin a bubble for 12 or 13 years now. And if there's one thing you cannot argue with, it is the price. Now, you can say the price is going to fall tomorrow. Maybe it will, maybe it won't. But the fact is, Bitcoin's trading at $102,000, $103,000, $2,000 or $3,000 off record highs. If it was nothing, let me just finish, because I have a few things to pick up with what you said earlier. Because you said a lot of, like, if you're going to argue with something, it's important that you get it right. And this idea that people don't transact in Bitcoin daily trading volumes yesterday were $35 billion.
I didn't say they didn't trade it. They don't use it to purchase things. They don't go to the grocery store and buy their groceries with Bitcoin.
I said it's cash for the internet. It's not cash for the real.
Okay, so how many people shop on Amazon online and pay in Bitcoin?
Well, Amazon don't accept Bitcoin, so
who does? Where are the stores that are transacting in Bitcoin?
It is the most efficient way of making cross-border payments.
No, it's not.
It is. like repeatedly, if somebody wants to pay me in US dollars and you're not in America, making US dollar payments is a pain in the backside. You can send billion-dollar transactions. I sent a transaction the other day for 1 sat. That is 1/20th.
I could do the same thing with any other cryptocurrency.
No, you can't.
I can send. You tell me I can't send Ether. I can't send Solano.
You can do the same with other cryptocurrencies, but we're talking about Bitcoin. We're not talking about other.
So what? But I'm saying there's nothing unique about that, and I can do it with gold. I can send you my gold electronically.
You cannot send a payment. No, you can't. You cannot.
Yes, sure, I can.
You cannot send a gold payment of 1 sat, 1/20th of one.
Yeah, I could take an ounce of gold and digitize it, and I can have it
Peter,
divisible.
you could do this. There has been
send you a spec.
Gold money has been.
Gold money doesn't do that.
I know. Let me finish. Gold money proposed a digital gold payment system 20 years ago. There are probably 30 or 40 gold-backed cryptocurrencies. If people wanted to use gold, tokenized gold as a medium of exchange, they could. The market.
Yeah, but they don't.
Otherwise,
but the reason there's no demand is because people don't want to speculate in it. People are not using Bitcoin as money.
Yes, they are.
No, they're not.
Yes, they are.
I mean, you can probably find a handful of people, but go find a merchant online.
As I'm sure you know, Peter, there are 3 purposes of money. 1 is store of value. People are using that gold for that, and they're using Bitcoin for that. 2 is medium of exchange. They are not using gold as a medium of exchange, and throughout
Bitcoin. And they're not using.
They are using Bitcoin as a medium.
And they're not using Bitcoin as a store of value. They're speculating in Bitcoin.
Ignorance, Peter.
Yeah.
Nobody expects Bitcoin to store value. They expect it to go to the moon.
People use Bitcoin as a savings vehicle.
No, they use it as a speculative vehicle.
No, it is a savings vehicle. It is a savings vehicle.
Look.
Yes, they do. No, they don't. It's a childish way of arguing. And if you're not going to listen to me,
it's not.
Talk over me. Yes, they do.
Peter,
No, they don't. That is childish, Peter.
Peter and Dominic, can I ask that you, first of all, that we treat each other with respect and just wait for the other person to finish within a reasonable time, and then we'll have the debate. Just to change the subject a little bit.
I want to make a point on the bubble. I want to make my point on the bubbles.
Okay.
Because, I mean, gold is the furthest thing from a bubble. I know I'm in the retail gold business, and demand has been very, very low for years. Historically, you've had net outflows from gold ETFs. The public is not buying any gold. The price of gold hasn't even kept pace with the cost of mining it. The cost of mining gold has gone up more than the price of gold because there's not a lot of people buying gold. So gold hasn't even really reflected the debasement of fiat currency. So I think gold is still underpriced, and it's pretty far from a bubble. But the reason that Bitcoin is at 100,000 is because you had a bunch of Wall Street companies launch these ETFs and bought a bunch of Bitcoin. So a lot of speculators who have brokerage accounts, hopped on the bandwagon because they wanted to make money. And then that ran out of steam. So a bunch of people in the crypto industry gave a lot of money to Donald Trump to help elect Donald Trump. He got a lot of votes by pandering to the Bitcoin crowd. And now everybody thinks the U.S. government is going to buy Bitcoin and burn them, basically. They have this bill before Congress for the U.S. government to buy 1 million Bitcoin and never sell them for 20 years. And so that is why the price is going up. It's massive speculation on buying. But all of this is a house of cards. It is all going to collapse eventually. The fact that it's gone up so much doesn't discredit anything that I've been saying about it. I've always acknowledged that the price could go up. Sure, if people are willing to buy it, the price is going to go up. The problem is when people stop buying it, the price is going to collapse. And, I've never heard more foolish things said by smarter people than Bitcoin. I mean, in my career, the things that I hear are complete nonsense. And it's very frustrating, and sometimes you can hear it in my voice, and it's really a shame that so much effort and is being wasted on this. And yes, it's going to eventually collapse, just like the tulip bubble crashed. And maybe you could say that there's some benefit to Holland in the flower industry because of that bubble. And maybe there's some future in blockchain. I don't know, but there's no future in Bitcoin. Of that I'm certain.
So, gentlemen, I have a question for you. Yeah. Will Bitcoin eventually, like gold, be a mainstream central bank reserve asset?
I don't think it'll ever be anything at central banks. Central banks are buying gold. They'll continue to buy gold. You know, you had El Salvador buy Bitcoin. I don't think, despite all the money that was given to the Trump campaign, I don't think Donald Trump is going to try to buy Bitcoin on his own. I don't think there's a prayer that the Loomis bill is going to pass. It's got no support. It's got no co-sponsors. So I think it's all a bunch of hype to pump up the price of Bitcoin so the insiders can continue to sell, because that's what you need. You, like any pyramid scheme, you need a constant flow of new buyers so that the old buyers can get out. And that's all that's going on.
The Dominic, I noticed in the Financial Times this morning, the Czech central bank was talking about maybe adding Bitcoin to its reserve status. What do you think? Will it potentially be mainstream for central banks?
I think, you know, it's worked incredibly well for South Africa. Sorry, for El Salvador. And, you know, governments and particularly central bankers, people suffer from career risk. They don't like to do things unless they see somebody else do it first.
Yeah.
You know, it's really worked for El Salvador. If the Czechs do it and it works for the Czech Republic, it will accelerate. If America does it, and we don't, you know, Peter assures us that this bill won't pass, but we won't actually know until they put the bill before Congress. And, you know, if the United States starts using Bitcoin as a reserve asset, and I think in a funny kind of way, it could really work in the United States' favor, because the fact that the Fort Knox gold hasn't been audited in 60 odd years, and we don't know if that gold is there or not. And we do know that China's gold reserves and the amount of gold that China's been importing, its gold reserves are understated, certainly by a factor of 5 and perhaps even by a factor of 10. And, you know, there's a very distinct possibility that China's gold reserves are double those of what America pretends theirs are. And if China's gold reserves are anything like as big as we think they are, and I'm basing this simply on the amount of gold that's moved to China over the last 20 years, but particularly since 2022, if China's gold reserves are dramatically understated, meanwhile America's are overstated, that's quite a distinct possibility, then America has a huge strategic problem on its hands in 5 or 10 years' time when this comes out. But if somehow America, you know, steals a march and suddenly has this Bitcoin treasury asset, and Bitcoin as digital wealth really does eclipse gold in the same way that the car eclipsed the horse or something like that, then suddenly, you know, America has a huge advantage. So I think strategically, America will be well advised to have a Bitcoin strategic reserve. Yes.
Yeah. Remember, the funding mechanism in the Loomis bill is to pay for the Bitcoin by selling our gold. So if the gold's not there, there's no way to buy the Bitcoin.
It's insane. Like, because if they're going to sell their gold, they're going to have some kind of audit. I mean, I really wouldn't advise that, but that's a dumb funding mechanism.
Michael Oliver, what do you think?
Buy Bitcoin.
Getting off the issue of the validity of Bitcoin or cryptos, just technically speaking, whenever you have a bubble, and I think we've got the attributes of a bubble, meaning a market that's technically excessive, even if it has virtues. Go back to the .com top. By the way, we have called every major turn in Bitcoin since 2017 when it started trading futures, and we've called them well. This high, we're beginning to think is a top. Okay, a little bit of downside evidence, and we think, okay, you're at a top. Now, so what? Okay, that doesn't change the argument. It still could be valid in the long term. Gold has had many tops that have broken hard and so forth, and yet it's valid. Okay. But and even go back to the .com top. Okay, NASDAQ 100 was a leader then. Okay, and sure enough, the internet bubble, which it was, everybody calls it that, was valid. The fundamental statements about it were absolutely true. In fact, it changed the world in ways that weren't even predictable then, in positive ways. And yet the NASDAQ 100 went down 82.5% in the next 2 years after a bubble top, 82%. And it took it until 2016, 16 years later, to even re-achieve that price high. So even with something that's valid, the internet bubble, it took it an investment lifetime to come back to the nominal break even, and years beyond that to get the real break even because of the decay in the money. So even if something is valid, it can still collapse and effectively wipe you out. And we're arguing
hundreds of companies went bankrupt too, so they never came back.
Yes, and yeah, tangential events that aren't seemingly directly connected to Bitcoin, and yet, oops, that firm went under. Why did it go under? Because of this, that, or the other. And all of a sudden, other dominoes that are secondarily and tertiarily linked to Bitcoin go under and create headlines.
Sure.
So
I mean,
think that's
one of the most
ahead.
telling bubbles I remember was post 2011 when gold went to 1920 in the Greek crisis, and then the next 4 years in junior mining, all those mining companies just went totally.
Correct. Yeah.
One of the most painful experiences I've ever known.
That's correct. I agree. Yeah. Even valid markets can have bubble phenomenon usually.
And they're even though gold is higher now than it was back then, quite a bit higher, most of those gold stocks are way below where they were then. Yes, even with a much higher gold price.
Bitcoin's still been a much better investment.
In fact, our view is in 2025, the place to look is watch the mama gold, which I think is quite positive, and it is not hot at all. I suspect you could multiple by 10 from where you are now, if not more. There's certain events out there that will cause that. But the miners are the place to be. Gold, silver miners.
I agree.
I've got this theory. I've got this theory that Peter 10 years ago actually bought shed loads of Bitcoin. And
I wish I had bought Bitcoin 10 years ago.
Of course you do. Well, at least you admit it. But they say you get Bitcoin at the price you deserve. But you know, if you bought it when you first heard about it and just like embraced it rather than hating it, you'd be a much happier person.
Well, I'd be a much richer person. It's happiness is, you know, money. They say money doesn't buy happiness.
It does.
Yeah, but I would imagine I would have sold a lot of it had I bought it back then. But yeah, I still might be holding more and selling into the hysteria. I mean, I wouldn't believe it, but yeah, I'd have more money had I bought it. I mean, I'd be a multi-billionaire, I guess, if I had held on.
Gentlemen, we're going to go to live audience shortly for questions. Before we do that, can I ask anybody has a view on MicroStrategy and the impact of MicroStrategy, $80–90 billion NASDAQ company with about half that in Bitcoin, and they were, I believe, back in November buying Bitcoin at a rate of $5 or $6 billion a week. Now it's a lot less than that because, as Michael was pointing out, when NASDAQ and NVIDIA goes, that seems to turn off the supply of money to firms like MicroStrategy. How important, maybe in the context of silver, the Hunt Brothers, 79.80, or any other market where you've got, your words, Peter, were a Ponzi or a pyramid scheme where you've got to keep fresh capital coming in to replace the people that are selling. How important is MicroStrategy to the Bitcoin price?
I think it's extremely important. I mean, you know, MicroStrategy, you know, buying over $1 billion of Bitcoin a week, kind of like clockwork. Every Monday, Saylor posts how many Bitcoin they bought. So you've got people front running Michael Saylor. I mean, if you know there's this huge buyer that's just going to keep on buying regardless of price, he doesn't wait for a pullback. He just buys. Yeah. So if you know that this big buyer is going to be there, well, you want to buy to get ahead of them. And so I think that he's encouraging other people to buy Bitcoin to try to ride that. But of course, this huge buying in and of itself is pushing up the price. And how is he funding the buying? It's with borrowed money. Either he issues stock in his company, which he doesn't have to borrow if he just sells stock into the market because the stock trades at a premium. So for now, he could sell shares and then take the shares and buy Bitcoin. But he also borrows money in issuing convertible preferred stock. And now there's another common convertible, which is a form of debt because the holders could actually ask for their money back if the price of the stock doesn't go up, which eventually they will. But for now, it's a self-perpetuating loop where the higher the price of Bitcoin goes, the higher MicroStrategy, the more stock he can sell, the more Bitcoin he can buy, the more money he can borrow to buy more Bitcoin. And so it's all feeding on itself to push the price of Bitcoin up. But eventually, just like what happened with the ETF, or not the ETF, was a Grayscale Bitcoin Trust, at one point it traded at a big premium, and I always warned that eventually it would go to a discount, and in fact, that's exactly what it did. It went to a huge discount. It got bailed out of that discount when it became an ETF, but there was a dynamic in place that caused it to be at a premium, and then it reversed and that resulted in a discount. Well, I think the same thing is going to happen with MicroStrategy. I think at some point the stock is going to trade at a discount to its Bitcoin, not a premium. He's not going to be able to issue any more stock. I think he's not going to be able to issue any more convertible preferreds because the people who are buying that are going to start to be cognizant of the real risk that that MicroStrategy may in fact go bankrupt and won't be able to repay this because all it has on its balance sheet is Bitcoin. And then when MicroStrategy has to sell Bitcoin to repay the debt, and well, the market is going to collapse. The bottom's going to drop out when the biggest buyer becomes the seller. I think the only thing that could bail him out right now is if the U.S. government buys Bitcoin, which I think is ironic because Bitcoiners need a government bailout to stop the whole thing from imploding. We need to get the U.S. government to use the force of government. Like, I've never bought Bitcoin on my own, but the government might force me to do it in theory if they were to subtract. I have a reserve. But I think it's going to be a crash. And I think the ETFs are also going to contribute because I think what's going to happen is when the people who own all these Bitcoin ETFs, and they have a bigger and bigger part of the float now, when the market starts to drop, and a lot of these people have stop orders in, and they're not philosophically hodlers, they're just trading it like because it was going up. But when you see a lot of people try to get out of their ETFs because they just want to cut their losses or they want to lock in a profit, all those ETFs now have to take those Bitcoin that they own and go into the market that day and liquidate it at the market. I don't think there's going to be the liquidity there, and there could be a complete implosion. And what's happened in the past when there were big Bitcoin drops, all of a sudden there'd be a bunch of new tethers created to buy up those Bitcoin. But the problem is when the ETFs sell, the buyers can't pay in tether. The buyers have to pay in actual dollars because that's what the brokerage firms need to put in the accounts of their customers. They can't say, hey, we sold your shares of your ETF and we gave you tether, right? They got to get. So I just think that there's a complete collapse coming both from MicroStrategy and the ETFs when they all have to get out.
Okay, thank you. Dominic, what do you think?
I think Michael Saylor is a genius. I've met him several times. I listen to him speak all the time. He's just one of the most articulate people. He's got incredible vision. And you look at interviews with Saylor going all the way back to, the noughties. You can find old interviews, and he's just an incredibly articulate, high IQ, clever man. And what he's done with MicroStrategy in the last few years, it was a largely ignored tech stock. And he's, in the space of 3 or 4 years, he's turned it into the most talked about stock in North America and probably the world. He embraces volatility. He used to say he used to have to spend $1 million a year on publicity. He doesn't need to spend anything on publicity now, because his stock is so talked about. And he doesn't, as Peter says, he doesn't wait for dips. He just buys. Well, what else do you do in a bull market? That's the best thing you can do in a bull market. We know that a correction will come in Bitcoin at some point because that's the nature of the beast. It goes through 4 cycles. It has quiet accumulation, blow off top, nasty sell, and then it goes into a sort of ugly range trading, and then the next period of quiet accumulation comes. That's the nature of Bitcoin. It's always been the nature, and that will keep repeating. But with each bull market, the volatility decreases as more and more people buy it. We in Great Britain owe Michael Saylor an enormous debt of gratitude because our glorious Financial Conduct Authority made it impossible for us to buy Bitcoin or Bitcoin-related assets through traditional brokerages and so on. We're not allowed to buy the ETFs, but one thing we can buy is MicroStrategy. So thank goodness for Michael Saylor because he's enabled people in the UK to invest in this market. I recommended MicroStrategy to my readers 18 months ago. The Flying Frisbee is my newsletter, and it's gone up more than 10 times. It's been the most fantastic investment. Michael Saylor is a genius. And as I say, everyone can say, this is going to happen. This is going to happen. It hasn't happened. You have to look at what has happened. And he's turned a nothing company into the most talked about company in North America. And I promise you, within 10 years, Michael Saylor will be the richest man in the world.
Good God. Michael Oliver, have you a view on MicroStrategy or its relevance?
No specific view, though it does provoke me to run reports on it. I don't know how long its history is. We need some history in the stock to do a long-term analysis. But no, I'm sorry, our technical assessment of Bitcoin is there's been made many tops over the last since 2017. In fact, when it came on board, it made a high. right after it came on board in the futures market. So in like January of 2018, it peaked. We said you're going to 5,000. I think it was 17, 18,000 then. It went to 3,500. Okay, even that was a wipeout. Okay, yeah, it came back again, had another drop and so forth. So Dominic's correct in that it keeps having drops. This one, however, could be different because unfortunately it does have what we call bubble attributes. And I don't just mean the emotion that you might feel, but the technicals have bubble attributes. And it echoes the NASDAQ 100. And I think when that NASDAQ 100 bubble breaks, yes, all the AI stuff is valid and it'll change the world, et cetera, but it's vastly overpriced. And just like the internet bubble, when it broke, it went down 82% over 2 years.
Is that where we're going, Michael, with NVIDIA
I
and
think you
Bitcoin?
could go down severely, yes. And this is different than then because that was like a 6-year bull market and you'd only tripled. This has gone up 18-fold in the NASDAQ 100, largely due to those front-end stocks over a span of 15 years. And again, you can say, well, it's because of the good economy or this, that, or the other. Look at an M2 chart and look at a Fed funds rate chart. We've been drug infused by the central bank for 10 of the 15 years for sure. And even when they raised rates, and you look back historically at what that recent rate rise was compared to history, it's trivial. So we've been drug infused with free money for a decade and a half. No wonder we have bubbles. Simple as that. And that's what's driving gold. It knows there's a bubble, and when it breaks, the central banks will go absolutely berserk.
Question, guys, from the audience. Jason Segal asks, if Bitcoin didn't exist today, what would be the price of gold?
Well, I think on the margin, I think that Bitcoin may have taken some demand away from gold, but I think it's more competing with other risk assets. I mean, you talked about the high correlation between Bitcoin and the NASDAQ. Bitcoin has, very little correlation with gold, which I think is interesting. If it's supposed to be digital gold, it should be somehow correlated with actual gold, but it's not. So I think that people who are gambling on Bitcoin, I think most of that money is coming from other speculative assets that they might have gambled on instead of Bitcoin. I think that there's been a bigger impact on the mining stocks and maybe even on silver, because silver is more of a retail. Gold, you've had a lot of central bank demand, and I think that's been unimpacted by Bitcoin. But I think where you might have seen it is in the silver market. Silver seems very cheap. Silver is called the poor man's gold. And so if some of the poor men have been buying lottery tickets on Bitcoin, and certainly when it comes to gold, I think that some of the money that went into Bitcoin ETFs came out of gold stocks. I think that's one of the reasons that gold stocks have been weak since the introduction. Because since the Bitcoin ETFs have come out, you've seen a big rise in the price of gold, but the gold stocks have actually gone down. And so I think maybe people have sold gold stocks to buy Bitcoin ETFs. So there may be some more of an impact there. But on the actual price of gold, I think it's marginal.
Thank you, Dominic.
The primary buyers of gold in this latest bull market have been central banks. It hasn't been retail investors, and particularly since 2022. And central banks don't buy gold miners, whereas retail investors do buy gold miners. And I think if retail investors were buying gold, they'd also be buying gold miners, but they're just not.
And Michael, have you made the point that? Sorry, Michael.
If you break the stock market, as we think it's about to, I think you'll get the blood flow out of that asset category, and it will go into the two categories it always goes into. And I'm talking going back 100 years. And that is gold, and especially since 2000, T-bonds. Now, the T-bond rally right now, though, don't be confused by it. I think we're going to get a drop in rates, not because of anything the Fed does in the short end, but because of money beginning to flow out of the stock market by uncertain asset managers who are simply looking for an alternative, quote, place to park some money for a period of time that looks safe. And T-bonds are starting to behave totally inverse to the stock market. That's when the gold miners will go berserk, is when stock investors move out of stocks and don't go out and buy silver futures and leveraged ETFs on bullion. They go buy gold miners. And gold miners are dirt cheap historically. They've been so since 2015. In fact, they've not gone down. That's a very interesting point we've made in our reports. People think miners have gone down over the last 10, 15 years. No, they made their low in 2015 and have gone up In fact, they've gone up. XAU index is up more from its bear low in 15 than gold is. Ask a gold mining investor that, you know. So, but I think it's when you bust the stock market and perhaps Bitcoin at the same time that you'll find money flow going into the miners.
I hope you're right, Michael. And I'm positioned. I own plenty of miners. But one observation that I make is that if you look at the ratio of gold to gold miners, it's been falling since 2004.
No, it ended. No, it's
Well, it's kind of flattened out now. It's
no, it stopped dead in December 2015. The
no.
Yes, it did. I measure it.
If you look at the Huey to XAU, or the Huey to the gold to the Huey ratio, it peaked in 2004 and it's been falling ever since.
Well, XAU and GDX both made their lows in December 2015.
Versus gold.
Versus gold.
Versus gold.
And versus the stock market.
No. It's been falling since 2014, not falling at the same rate since 2004.
I'm sorry. The math is that when you divide the price of XAU into gold,
can we get a chart up? Can we get a chart up?
I've had a recent
versus gold. Since 2004, it has been falling. It's flat.
Collapsed. Yes, it collapsed.
But it's even since it made a low in 2015, then it rallied a bit, and it's kind of retesting the low now.
Oh, it's never taken out the 2015 low, which is to say that the price that
I'm going to get the chart up now, and I'll put it up on the chat, and then we can stop.
Well, I can give you a number. XAU.
Well, regardless, it's cheap. There's stocks.
Yeah, XAU right now is trading around 150.
The reason
its low was 38 in 2015.
Yeah, I'm talking the ratio between not the low and the XAU. I'm talking about the ratio versus gold, because gold's gone up since 20.
No, I know, but you measure the percent rise in gold from 1,050 to 2,750. Okay, do that ratio, and then take XAU.
I'm going to put the chart up on the thing, and then we'll just end. I'll put it in the chat.
XAU made a price low at 38. It's now 150. XAU is up more on a percent basis than is gold. It's also, by the way, up more than the S&P since December of 2015, XAU index.
Yeah, but that's
spread
the
has gone
absolute low.
Sideways.
They got but gold, those stocks got crushed. That's when
putting-
gold
I know.
went down at 1,000.
They've remained at crushed levels since 2015.
Here's the chart
No
in the chat.
But they ceased to lose value.
Okay, the chart is in there.
As the price of gold went way up, because the price of gold in bottomed in 2015 at about 1,005, and now it's 2,750.
Okay, I've put the chart, folks. I've put the chart in the chat. You can see it made a low in late 2015, and it has retested that low, and we're just marginally above that 2015 low now. Now, the point about that is in 2004, what happened in 2004 that suddenly made this anti-mining sentiment come along. And the reason for that is there became a plethora of other ways by which you could own gold. We had all the online things, Bullion Vault, Gold Money, all those online gold dealers. We had the gold ETFs. There was gold spread betting, CFDs, options, all these different ways by which retail investors could buy gold, and they could buy leverage gold, at which point they went, what's the point with the mining companies and taking on individual company risk? So that's the problem that the gold miners have had. If you look at the 1930s, the exact opposite happened. It became illegal for American citizens to own gold, but the one thing they could buy was home stake. And so all the capital that would have gone into gold went into home stake instead. The reverse has been happening since 2004. And, you know, I own a lot of gold miners. I want them to go up. I am positioned for a sort of post-bubble contraction in gold miners. But there is this major problem that why take on the individual risk of a company if you can just buy gold instead?
Okay. Question from the audience, gentlemen. Because whereas DeepSeek is attacking other Western AIs this week, is it possible that an AI could crack the foundational technology of Bitcoin? Dominic, I think you might be best placed to answer that.
I don't know about that, but I know the computer power of the Bitcoin network is equivalent to something like the world's 1,000 most powerful supercomputers combined. It is that potent a network, the combined computing power of it. So to take down Bitcoin would need an properly extraordinary amount of computing power. And people have been trying to do it. You know, hackers have been trying to do it since Bitcoin was invented. It's part of one of the reasons Bitcoin is so resilient is because it keeps getting attacked, and with each attack it gets stronger. But I guess at some point in the future, I don't know, I'm not a computer expert, but I'm told it's impossible, but nothing is impossible. So maybe AI and some supercomputer at some point 200 years in the future or something will be able to take it down. But for the moment, it is the strongest computer network in the world by a country mile. And that's what differentiates it from the other coins.
Gentlemen, we're just coming up on the hour mark, so I'm going to ask each of you to summarize your views on Bitcoin versus gold, and maybe if you're bold enough, give us a price prediction for 12 months from now for each of them. Peter, shall I start with you?
Yeah, look, they reinvented Bitcoin as digital gold because it didn't work as a as a payment system, as money. And so they rebranded it, and but I don't think it's any more digital gold. Again, then I said an image of a hamburger is digital food. I think it's fool's gold. But yes, fools have made, or people have made a lot of money in Bitcoin if they bought it, and now the price is higher and they can sell it. But the people who are buying it now are hoping that there's a greater group of fools in the future that's going to return the favor and pay an even higher price. But this type of dynamic cannot go on forever. It won't go on forever. I think it's kind of on its last gasp if now they're trying to count on government buying to maintain the momentum, because I think they've run out of private buyers to buy with their own money, so they need governments to buy with taxpayer money.
Is the price of Bitcoin and gold higher or lower in a year's time?
Look, Bitcoin, I don't know. It could be either way. It could be higher, it could be lower. I think gold will be higher. I mean, I think there's no question that we're going to keep debasing currencies, dollars, euros, pounds, yen. I mean, the money supplies are going to keep growing. And so you're going to need more fiat currency to buy an ounce of gold. I mean, that's been continuing. I mean, for the past 25 years, the price of gold has risen more than the S&P 500, which means the real value of the S&P has actually gone down if you price it in real money. But Bitcoin could do anything. I mean, it could go up or it could come crashing down. I don't own it, and I think there's better bets. I think there's more upside potential in other assets and less downside risk. So I don't feel like speculating in Bitcoin, but I certainly wouldn't classify it as a store of value or a safe haven. It has nothing in common with those types of assets. It's a highly speculative, probably the most speculative asset, because it's all sizzle and no steak. I mean, it's pure meme, and you buy it simply because you think other people will, and people try to say that you buy it now, you're early. That's one thing I'm sure of. You're not early buying Bitcoin now. When all the cab drivers are talking about Bitcoin, and the cashiers, everybody knows about Bitcoin, everybody talks about Bitcoin, there's no way you're early if you're buying it now.
Thank you. Michael Oliver, Bitcoin and gold, where are they in a year's time?
If we get a sell signal on Bitcoin, and it'll require some decline to get that, we get a sell signal that breaks the trend structure on momentum, it'll go down. I think it'd go down seriously, because I do think it is reflective of NASDAQ, and I think NASDAQ 100 is going down seriously. I don't think it's going to continue to dance on glass, which you don't see it on the price chart, but we see it on momentum. Okay, gold. Some history here. I'm not making a prediction on price because it would be ridiculous. I think it could be far greater than this. And I think we're entering the acceleration phase. There are many fundamental macro events out there that are cracking. Things that didn't work aren't working. And the publics around the world are here, there, and everywhere. Argentina is a recent example, who are saying, this doesn't work, get rid of it, okay? You start to see market breakage, you will get physical pain, emotional pain on the part of everyday people. That doesn't show right now, because the one thing that they smile about is they look on the screen and they can tell their retirement account went up X amount last year. You take that away from them, panic sets in. Go back and look at the history of gold since it was legalized. There have been eightfold moves. Eightfold. From the 76 correction low just above 100, it went to 850 by 1980. From the lows in 2000 to 2001, it was 265. It went to 1920 by 2011. Okay, we started from an intraday bear low of 1,045, let's call it 1,050. You go up eightfold, it'd be $8,000. Okay, now another point. Silver's ratio to gold. If you go back through 50 years and look at where is silver as a percent of the price of gold been, many times, almost commonly, it's been at least 3%, 2.5% to 3% of the price of gold. It was even 6.5% at one time. But it's not an uncommon event. It doesn't require a major bull market. Well, if you see $8,000 gold, which is merely a reflection of two prior bull markets in terms of ratio gain, and we certainly have fundamentals that could drive it much further, and multiply that times 0.03, $240 silver, okay? That's just getting back to a relationship to gold that it's had many, many times. So right now, I would be focused on gold as the mama and the peripherals to gold, the miners and silver as the best place to be.
Thank you. Dominic, so I've heard that we've got two bulls on gold and Peter sitting on the fence on Bitcoin, maybe once burned, twice shy, and Michael definitely saying, watch out, that Bitcoin will follow NVIDIA. So you're the tiebreaker. What do you think?
We have this fantastic borderless medium called the internet, and it needs a borderless system of money. And finally, we have a universal borderless system of money in Bitcoin for the borderless medium that is the internet. That gives Bitcoin a scalability that no other currency except for gold has. Gold is a universal money as well. And the fastest growing workforce in the world is the freelancer, the contingent worker, the gig worker. And within that workforce, the fastest growing single person is the digital nomad. And they need a borderless currency. And they need it as a savings vehicle, and they need it as a payments vehicle. Every day you look on the internet, payments for billions of dollars in one single payment, no permission from anyone, happen with Bitcoin. It's a beautiful thing. At the same time, you can make a payment for 1 sat, 1/20th of 1 cent. The implications of those kind of micropayments, which you can't do with gold, are incredible. The problem with tokenized gold on the internet is it requires third parties. It requires promises, trusted third parties. Bitcoin is a bearer asset in itself. For the internet, it is superior to gold. My prediction for Bitcoin is this year we'll see probably 150, and I should say Bitcoin is a currency for the new borderless worker on the borderless medium that is the internet. I would say, I think we'll probably get to 150 this year, maybe even 200 if we get a blow off top before a nasty correction and the next winter in Bitcoin comes in. Gold, I think we'll comfortably see 3,000, maybe even 3,200, 3,300 at some point this year.
Fantastic. Bullish for both. Fantastic. And then a bear market to follow. On behalf of miningnetwork.co.uk, our co-hosts Arlington and Cat Calls, I want to thank you all, gentlemen, for your candid views. As speculated, sparks flying. It was strong arguments. I've certainly learned something. Thank you all for your time.